This week's Market Outlook, you're with me, Olivia Higgins. Smoke them all out, an interesting finish to the week with the ceiling pushing players to the brink of capitulation, only to see yet another violent squeeze taking the indices from deep red to green. On top of that, we had a complete debacle out of TGT, who took down every retail stock this week, and aggressive selling spilled over into the safest and most crowded defensive stocks. From an AAPL to the safest staples, while everybody went to hide, they obliterated growth issues on a daily basis. Put sweepers once again were the dominant force on Friday, with all the size and aggressive options orders showing up in bearish paper. Call sweepers were mostly invisible for the majority of the day, outside of some late-day bull flow into the squeeze. Friday's top bull bets list was slim picking, with top bullish activity detected in defensive staples, play Colgate. On the sentiment front, sentiment remains completely washed out, with the Bank of America bull bear indicator on the bull signal. And the fear greed index is now standing at 13. NAAIM exposure shows the professionals have completely de-risked. Most of all, Bank of America FMS showed fund managers showing zero interest in equities when it comes to the economy. And on that note, that is exactly the type of setup that is ongoing. Equities positioning and exposure as washed out as you will ever see it without seeing capitulation. In other words, players and funds have taken down their risk exposure aggressively, but have not really taken the dive yet, betting or fearing on a substantial downside form here. Nomura's McElligott framed it perfectly recently by saying players are so underexposed to equities that they were more concerned about a bear market squeeze than a substantial sell-off. Pretty rare to see everyone with such a negative view on any potential upside in the market, but refuse to bet or protect against the potential of a crash. To sum up, every time the market looks like it may break, there will be a violent squeeze to keep any bears honest. While it's certainly possible to see some upside follow through, we gotta believe it's going to be extremely difficult to time because of so many tactical eyeballs looking for the same opportunity. There could be a bid as well from month and quarter end rebalancing than the buyback window opening, so keep that in mind as well if we see any additional weaknesses. We can certainly continue to look for that red to green squeeze intraday, especially when tactical sentiment indicators and institutional sweepers confirm. But aside from that, with the Fed against us and now the fundamentals starting to really deteriorate, it's currently too tough of a play. Additional note, individual names could provide some alpha if call sweepers cooperate. That's the bull best hope that they seriously start to do some stock picking out there, and that would be ideal for us because we witnessed last week there was some names starting to show relative strength and outperform the indices. So we wouldn't have to rely on the overall indexes as much. Have a good week, and we'll see you for the next Market Outlook. Signing off, I'm Olivia Higgins.